Well, hello, everyone. My name is Chad Griffiths. I'm the host of the Industrial Real Estate Show. And just before I get started with this week's interview, just wanted to give a quick note about the situation happening in Ukraine right now. I recognize that a podcast talking about commercial real estate is far from being as important as the issues going on in the Ukraine right now. And my heart goes out to everybody in the Ukraine and Ukrainians living all over the world. I hope that there's a peaceful resolution to this sooner than later. I can't imagine what everybody's going through. We're still continuing to do on this show because, as you guys know, I'm super passionate about talking about industrial real estate and investing. And my podcast producer, Wyatt, and I book guests weeks, sometimes months in advance. And I'm really excited to talk to this week's guest, who I saw on another channel. A friend of mine, Rafael Coelho, who has a podcast. He interviewed her a few months ago talking about self-storage. And it's an awesome story because Masha has started investing in self-storage, bought a property in North Carolina, and then moved to Florida or to Texas to buy another one. She lives in Florida, and it's a fascinating story about how passionate and dedicated she is about the self-storage business. So I'm really excited to introduce you to Masha. And Wyatt, if you can bring Masha on. Masha, thanks so much for joining me on the call.
Chad, so grateful to be here with you and sharing with your guests. Hope they find some value in this show.
Well, I know that I'll certainly find some value because I love talking about real estate for one thing, but I also am just very curious about self-storage because self-storage is a niche industry in itself. Whereas like 20 years ago, people wouldn't even have thought of it being this organized, almost like an institutional grade investment, where now there's big real estate investment trusts and big groups that are pursuing this as an investment strategy now. But I think that there's still a really good opportunity for private investors like yourself to pursue self-storage. So I'm fascinated to get into your background on how you have two now, right? Well, one in North Carolina and one in
Yes,
Texas.
at the moment we have two, and right now pursuing third project in Columbus, Ohio,
Oh,
and
congrats.
actually building one.
Oh, so you're okay. Well, we'll jump into that as well because
For
I'm
sure,
very
for sure.
curious to hear about that. So, first question: How did you get started? What was the appeal with getting into self storage?
I was pursuing. I was a little bit involved with real estate investing, the residential part of it. My ex broker, when I was a real estate sales agent, was doing some flipping project. And to make long story short, at some point, he disappeared, and the money invested disappeared, and so he, in a way, stole the money. And it was a great first experience of real estate investing. So after that, I thought, oh, I will never do real estate investing, right? You burned out. This is a bad thing to do. But after a couple of years, I realized there's no better vehicle to build wealth or to build that income. And it's just real estate, and we all know. And while pursuing back to residential, I discovered, there's commercial part of it. Interesting. It's not only for billionaires to do commercial real estate. Maybe I can do it. And at the moment, I asked my residential real estate investing coach, can I pursue that? Can I switch to commercial? Maybe I wasn't sure at the moment, was it multifamily, mobile home parks, or self-storage? And she told me, not really. First, you have to be doing heavily flipping, heavy like rentals, buy and hold, maybe wholesaling. And then maybe a couple of years, you can pursue commercial. And I decided not to really listen to her and go talk to self-storage investors, mobile home park investors. And what I discovered that you never know what you can get. Just try it out. And I decided to try it out. I started exploring which asset class to now in commercial space. And I've been looking into my boyfriend. He was interested about warehousing. And then I find out, there's self-storage. Self-storage requires less management, less maintenance. It's like a business. You do still marketing. You just rent out space. There's no tenant laws. There's no, you can auction out people in 1 month. And like looking at you can automate it. And I love automating things. And after that, I was, okay, let me just do self-storage. And that was when COVID started.
So you got into it then, what, early 2020? Is that when you bought the
Yes.
first property?
No, this is when I decided to pursue self-storage. So
Right in COVID. Yep.
yeah, so that's when I just realized that that's what I want to do. But it took later on than when we bought our first facility.
Cool. I see Neil just joined in. He said he's excited to learn about self-storage. Neil, thanks for joining in. And I saw a question pop up from Darren, which actually leads me to another question as well. And I'd invite anyone that has questions for Masha as we're going through this, just type it into the chat and we'll try to address as many questions as we can. But to Darren's question there, Wyatt, if you don't mind pulling that up again, self-storage, is it essentially industrial position to the public?
Interesting question. So if you're looking in self-storage, I would say compare it more to multifamily. So you have like units, you're renting it to tenants. So you have multifamily where you rent apartments, or you have storage, you just rent it or lease it to just an empty space for tenants. And they have the differences. You have month-to-month leases, where in multifamily you usually have yearly leases, depending. And it's really similar in that perspective. If you look at industrial, actually self-storage itself has typically two types of customers. Is somebody who just personal belongings or business belongings. So those type of business belongings could be similar to maybe industrial, where someone who has, for example, we have a medical care center. They have 4 units, 2 large units, which is 10 by 25, and 2 smaller. They're storing their medical records and some of their, I don't know, I honestly don't even know, and I don't need to know what they're storing, but I know they're more our commercial that client, right? But it's still more positioned to some people also use, for example, shipping. Amazon, eBay, a lot of people start shipping their products. They don't want to be storing at home. So their smaller businesses use it, self-storage, probably similar to like warehousing, just renting smaller units. So it's kind of a combo, I would say, between multifamily and industrial. It's a combo of multifamily and industrial. Together probably comes something like self-storage.
Yeah, very interesting. So when I guess one thing I want to explore with you is the difference between cold storage and heated or climate controlled storage. Do you have a preference on which one you pursue, or is one easier? Does one lease for more? Like what are the differences between heated, climate controlled and cold storage?
Most definitely. I mean, looking at where you want to, it's what's the market needs. Honestly, you can be thinking, oh, what do I want? What do you want? You want to make the most per square foot per dollar. So talking about, you usually self-storage is differentiated climate control and non-climate control. So climate control is those in the bigger buildings where you come in and you find those, that's climate control, simple, or drive-up units. You typically drive-up units are the ones that non-climate controlled. So per square foot, this is how we measure really income. And when you buy facilities, we don't buy them per unit like multifamily, or how much did you buy per unit? No, we buy it per square foot. So per square foot, you make more for climate control, obviously, because you offer climate control. Also, smaller units bring you more income, but you really need to analyze what's the market needs. If you're building somewhere or you're buying a facility somewhere in a tertiary market where people are having their trucks and they want to just simple store their big like items, whatever stuff, and they don't care about is it climate control or not. They just want to drive in their truck and drop off their stuff and leave. Where if you're looking more in a urban area, suburban, and depending on what type of items you want to store, then you want to go for climate controlled. So my 2 current facilities are non-climate control, and the one we're looking into building is definitely will be climate control, because there is high demand for both type, but we can make more money with the climate control.
I guess there's some trade-off as well, that if you're making more for smaller units or you're making more for climate controlled, you also have potentially higher costs, whether that's more management just because you're managing more smaller tenants than 1 or 2 larger ones. And then if it's climate control, there's just more things that can go wrong. There's more maintenance costs. So you really do have to evaluate those side by side. If someone was considering investing in real estate, would you just suggest determining what the competition is doing, or how would you identify opportunities where perhaps there is a gap? How would you do that on like a micro level at an individual market?
Totally. So honestly, nothing really matters but analyzing your competition as much. So in your small radius, you typically can discover what's going on. People won't be driving 10 miles away to store their items. They just want what they will do typically. They go on their phone, they look storage near me on Google, and they
Mhm.
look at anything around them. And they will call their first facility, that has the size that they want, they will most likely even rent there. So what's happening there is that they're not going to be shopping around like for, let's say, for apartment. They're not going to be shopping around so much. They just want something that's going to work for them, that near them. So that's why doing that competitor analysis, typically you look at the 3 mile radius, 5 mile radius, and looking how they're doing. Are there right now? Sometimes you're looking at the market and all their climate control, you can't find any units in climate control.
Hmm.
This is what you should build. If you're looking around and there's like in our the second Texas deal, there was no availability for larger units pretty much. Anything that goes 10 by 10 and 10 by 15 and up was pretty much impossible to find. But they have a bunch of 5 by 5, 5 by 10s, or smaller units you were able to find. So if you're thinking from perspective, oh, I want to make the most amount of money, oh, let me build the smallest because 5 by 5s make the most money, you will fail in that market because you want actually to offer the 10 by 10, 10 by 15, or 10 by 30. And
Mhm.
even maybe 10 by 40, depending. So it's really calling around, seeing where there's what's the occupancy. Like we call it mystery shopping. So
Yeah.
now when I used to do it, now I have my virtual assistants helping me in doing that. They call no competitors. Hello, I'm looking to rent a unit. Maybe I'm coming with my mom. Maybe we need this type of size of unit. We are not. So you kind of calling really blurry. You're not giving them exactly what you're looking for, but you want to get as much information from them. Oh, you know what? We don't have this. Oh, we don't have. Maybe tomorrow we have this unit going to open up, and you start getting that feel of occupancy. And
Mhm.
again, this is where if they're offering you a bunch of units, they have all sizes available, all amount of sizes available. This is a scary market. It means they unable to fill up. So their occupant stays low, and you getting in the market fighting against everybody so hungry getting customers, it's a failure most likely. But in those markets where there's limited amount of units available, that's a potentially hot market.
Very interesting. And I suppose that that also gives you insight into the rates that they're charging, whether they're renting out a 10 by 10
Oh,
for X amount. I'm sure you're compiling all that data as
that's
well.
exactly what we do. That you what we right away I compile in a spreadsheet all this sizes available, putting it on an average amount, and then
Mhm.
seeing what it is per square foot actually they're charging. So what I realized, we were planning on expanding on building more units in our first project, and it took me several months to understand that it doesn't really make sense because the income per square foot is low. We only had about, so to a little bit understand, about 65 cents per square foot per month we're making in the market. Where you go to Miami, they're probably making here, I don't know, $2 or $3. So I mean,
Wow.
this is just like kind of a rough example. But now in Ohio, in this project, we're looking at about $1.15. So building the same pretty much project will cost you not the same, but similar, because building's the same. Labor obviously will be different. Site work will be different. But let's say if we take in the same type of similar land size and similar project, it will cost the same, but the income is almost twice lower. So it takes you twice longer to get your returns back. So building, what I analyze and talking to experts also who have done it, you should be building somewhere where it's at least $1 per square foot per month. So when you do the competitor analysis and the number comes up less than that, beware, be careful.
Hmm. I do want to talk more about that development that you guys are pursuing as well, but perhaps even take me right back to the beginning. What was your experience with the first self storage property you bought in North Carolina?
Oh, yes, there was an existing facility. It came from wholesaler. However, the wholesaler was not getting back to me, and at the end dropped the contract saying, "Oh, the investors wanted lower price, the seller wanted higher price. We didn't, they couldn't sell it." I'm like, you didn't even give me a chance to offer, but it's fine. I pursued the seller himself, and we were able to get the property. And the most beautiful part, after 8 months, we were nearly doubling the value of the
Wow.
facility.
Good for you.
Yes, yes. And my investors and partners are super happy. So that was and the funny part, remember that other people didn't want to buy that.
Hmm.
Other people didn't see that opportunity. So sometimes looking at opportunities, some people don't see those opportunities
So
because
what did you see that others didn't see?
I mean, opportunity of the market, opportunity of raising rents, because this project didn't have already, it was already a lot automated. So it was a lot automated, and there was a lot of that value added. So typically, we want to find some mom and pop that's they don't know what they're doing. Like my second one, they're still signing leases in the office. They're still having a property manager picking up the phone and answering at some random times instead of having call center in place. So the second one, we require more adding that real value, like adding value of automation and simplifying the business and making the business smart, right?
Yep.
The first one, it was already uh, pretty much upgraded in that manner. But I saw opportunity in the market and seeing that we already were full, and just doing some simple adjustments like adding cameras, but nothing was major there. So I knew that there was market was growing and the competition was doing much better and much higher prices. So we just bumped up those rates, and right there we start increasing our value.
Yeah, well done. Congratulations on on doubling it.
Thank
That
you.
leads me perfectly to the next question that I had for you was automation, because I was always under the assumption that self-storage was a heavily management intensive business where you had to have active management. It wasn't passive of just having things automated like you're suggesting. So how has that evolved over the last number of years, or perhaps it's even evolving technology still, but how have you been able to take it from being like that hands-on mom and pop both working physically in the location? How have you taken it from that standpoint to being more automated?
So the beautiful part, when I start pursuing self storage, I started attending an enormous amount of webinars and listening to podcasts, and I became actually a webinaraholic at that point. So there was, I literally realized at the point, oh my god, I'm living in such a virtual world. I mean, it was COVID time, kind of perfect,
Yep.
but literally, I was learning all about automation and how to be able, because I knew I'm in Miami. I'm probably not going to be able to buy a facility in Miami. It's so competitive here and prices are ridiculous. You have all this overseas money coming in. I mean, all this.
Mhm.
It- so what can I do next? Florida, even Florida, like Miami, you can't go really like drive 2 hours. You're still in South Florida. So there's not so much opportunities. I realized that I need to open up my horizons and look at the other states. And that's how I was be able to actually get other properties is out of state. So be able to get it out of state, I realized that I don't trust, how to say, not trust. Okay, let me tell you like this. Human error. We humans just tend to make errors, whether it's by accident or on purpose. So how we can remove that error is to really have the check system verifying. So right now in the facility we have gate, right? The gate that verifies every customer has their unique code. So we know who is
Mhm.
entering, who is leaving. Simple as that. The next upgrade, and we don't have it yet, but having each unit has a one of the most famous system is no key system. So it's Bluetooth. So you're just coming in, you just with your phone, you entering your unit and opening up. That's it. And if you don't pay the gate code for you to enter to the facility, you can't, because we remove that code. So if you don't pay, you can't
Mhm.
enter until you pay. And if you so that's where it's automates. You don't need to have anybody there doing that uh, process. And when someone's renting, another beautiful part, you again get on your Google, or storage near me, go to website, book a unit, sign a lease, put your driver license, and then you receive that code. And that's it. No human involved.
Hmm.
We have call center. Obviously, there's people have preferences, have issues. So there's call center. That's what they do. They provide call center for storage facilities. They don't do any other type of call centers for anything. So there's a team of people sitting there all day long answering for different properties, specifically for storage, and it's longer hours, and it just works. So, and there's voicemail obviously system if they want to reach out later or pay. So it's, again, this one requires human interaction, but this is call center who is specializing in that. So pretty much we only have right now a facility caretaker, it's not even a manager, that comes, checks on units which are empty, which are open, gives the report. If someone leaves, sweep the unit, and this is pretty much their daily activities, and that's it. So
Wow,
and
that's brilliant. Like you've removed the onerous part of self-management where you have to oversee staff and people have to go and physically hand over things and give them a lock and sign the contract. You've
oh
removed
yeah,
that
you're
whole
right.
element. It's just all virtual now. So
Oh
you're
yes.
comfortable being in Miami and managing your property in North Carolina and Texas.
Super comfortable. Honestly, like I don't have a need. I went to North Carolina the first one, when we were under contract, and when we closed. But even getting under contract, I didn't even have to go there. We have
Hmm.
systems right now and the opportunities such as TaskRabbit. You can hire someone, go see, make videos for you. Go, they call call FaceTime for you. Look at all the facility. You can have an inspector obviously doing already everything, obviously the detailing. I'm not an inspector. I know inspector will do better job than me, really checking the physical right aspect.
Hmm.
Then you can at the same time, it's I'm hiring right now a virtual manager. So I'm going to train a virtual manager that's going to be overseeing all these facility caretakers. We'll be putting together whatever is happening they're seeing in cameras, whatever they're seeing happening in software, whatever all those reports together with call center, all that. There's several like kind of check marks that can be, um, for example, facility caretaker. I know that he entered with a gate at that amount of time. I know the cameras can also say at what time they entered. And plus, in the software, they also give me a report of what time they entered. So there's 3 ways to verify and make sure that he exactly entered at that time. So it's having those check marks in several places. It's all connected, and I will be able to even remove myself from pretty much from it completely. So that's exciting.
Yeah, that's so exciting. I love it how you're owning the physical real estate, but you are the CEO almost of a tech company because you're overseeing all these virtual employees of yours. It's brilliant. I love the model on it. I'm completely fascinated by it. So before we get into the development one, are you comfortable sharing any numbers or perhaps not, maybe not diving too deep into the ones that you already have, but sharing some of the potential that's out there on like what someone could expect on buying a property and then what type
Of
of
course.
returns they can make?
Sure, definitely, of course.
So, like, what is someone looking at? If someone wants to start buying a self storage, and perhaps it's out of state, like you said, or perhaps they're in a market where they're already comfortable with it, what can they expect in terms of a purchase price, and then what can they expect in terms of a return?
Great. So purchase price, it's storage. It can start with $200,000. It's just like buying a home. Uh, just a few units. You can find. I mean, I've seen like deals ridiculous small. Like, I mean, it's usually those don't make sense, like 20 units or 30 units,
Mhm.
right? I would say something above 50 is good. It's also like square footage. We don't really again go by units, so this is wrong to share. It's really looking at how many units. So, sorry, how many square footage. So in our first facility, we have 14,000 square feet, and our second one, 20,000 square feet. The one we will be building, and we're kind of going between two potential projects, either go bigger or smaller. And the bigger one is going to be 50,000, and the smaller one will be 17,000. So, looking at the price point, again, you can start with $200,000, a million, 5 million. There's facilities that go for several $1 million, can be 50 million. There's huge 500. There's some facilities that have 1,000 units.
Hmm.
So it's again what you're looking for, right? If we're looking also in storage, obviously you can buy, you can expand. This is what we're pursuing first, or you can build or convert. So my most something that I want to do really bad is conversion project, is
Hmm.
buying some retail space such as already that's been standing there. It's an empty space. Nobody knows what to do exactly with it. Such as, let's say, example, Kmart. Kmart, when they closed, what can you do with it? What can you do really with that space? Storage is a perfect place to convert it into. So those are typically, you can less material, right? It's much quicker than developing new one, and you can get in a market where usually you can just buy land. So there's different strategies, and those again depend. Building facilities, you can just buy a existing facility and add a small facility that can cost you $500,000, right? Or you can do a much serious development project and can do it. It can cost anything, again, starting from 2 million, 5, 10 million and up. I mean, I haven't looked at anything like really beyond that, but there is people doing some serious stuff. And returns wise, I mean, it's again, are you investing actively or passively?
Hmm.
They're saying that self storage can have great opportunity. If talking about IRR, I mean, you always like multiply the two, right? The
Hmm.
multiple two equity for sure. And IRR is typically above 17. We're talking we can get easily to 20, and some like more home runs can be 22%. I mean, in our first
Oh,
project, we definitely overdid it. I mean, it
well,
was
you
definitely,
doubled top line
yes,
revenue. Yeah, that makes
in
the
7
IRR look
months.
pretty good.
Yes, yeah. So it totally blew our mind. But it wasn't as big project either. You know what I mean?
Yeah.
It wasn't that exciting, but still. Um, so yeah, that's storage typically has exciting returns, but again, where you getting into it's storage also takes quicker time to build than, let's say, multifamily, because there's less detailing going on there, right? It's
Hmm.
just concrete and concrete and metal, if you think from that perspective.
Yeah, you don't have plumbing and washrooms and everything that you'd find in a multifamily suite, so it's
Exactly.
easier to
And then
build.
you, besides that, is also all those detailing after, make it look
Yeah.
pretty. People live there. Storage people don't live, they just drop their stuff and go.
To the point you made just a few minutes ago about 50 units being kind of like the minimum threshold that you'd consider anyways, is that just because of the cost of software and just getting everything up to speed? You have to have a certain amount of scale. Is that why 50 is kind of the number for you?
Not, I mean, I would not even go 50. I would go like 100 now
Mm.
units up in a way. It's just like for someone who is looking into getting, what's happening is, you, first of all, obviously, what you were saying, the economies of scale. Uh the software will, like, there's brackets, so you can pay the same amount of money for the software between like 50 and 200 units. I mean, but the income is so different. It's
Mhm.
4 times more, right? We
Yep.
have 50 and 200. The same is with paying someone to get the job done, and the same time and efforts you need to put to get it all done. Like
Yep.
buying a facility, it's a process. It's a long, I mean, it's a due diligence. It's checking. It's going. It will take you pretty much the same amount of time as you buying a $200,000 property or you buying a $2 million property.
Yep.
And then the lending opportunities. What's happening is under a million. Many lenders don't want to go under a million, and then they're looking at it as a residential, and then it becomes more like checking as you, not as a property, not as an income, but they're looking more as you as a borrower. And now it becomes much harder to lend. So in our first property, it was much harder to find also lending
Mm.
than in the second one, definitely. So banks, they again, for banks, for them to do the same amount of work for a small property and a bigger, they will definitely prefer to work with a bigger one. So that a lot of them just say, you know what, we don't want to deal with that.
No, that
But
makes sense.
you can get private money. This is what we got with our first project. We got private money. So it's also was did not have an experience. Banks didn't like, oh, you never done storage. Oh, what are you talking about? You're in Miami. You're going to be buying a facility in North Carolina. You're ridiculous. No, I wasn't. We doubled the value of property. But we had to go through this. And that's where you have to be prepared for different lending options.
Have you taken out that private loan with conventional financing now, or do you still carry
We're
the private debt?
refinancing right now.
Yeah.
We're in the process right now of actually refinance. I mean, we're looking at the different quotes to refinance it. We got also great opportunity as a private money. I won't say it was a great private money opportunity, but now it's time to definitely refinance.
Yeah, I'm sure you can get a few hundred basis points lower on your takeout loan than what you're paying in private. So your profit
Exactly.
on that will look even better. Your IRR will look even better. That'll be
Oh,
a
yes.
great opportunity to do that
And
one.
plus, we're planning to cash out, and get the money out and keep investing that, keep
Yep.
keep it flowing.
On the software side, I think people probably be pretty familiar with what like that old school management expense would cost on hiring someone to oversee everything and do that old school method. What would somebody be looking at for software cost to automate something? What would the bill be on something like that?
So it's interesting. So it's pretty it's not that expensive. So the current software that we're using and we're planning on switching, and if anybody's interested, you can reach out to me. I can give you the names. I don't want to be really saying names here, but we're paying right now only about $100 a month for the software. But again,
Wow.
yes, and then I know there's other options that can be 200, but they're including more things, such as we offer tenant insurance. So tenant insurance, with that software that comes, they only allowed to use their tenant insurance, and they're making 70-30% split. So they're making 70% and we're making 30%. Where with other software, they give you freedom to choose whatever tenant insurance you want to use, where we can make 70% and 30%. So there's
Hmm.
advantages. And the same as card processing, let's say this software only allows you to use their card processing, which is higher fees, where we can't go with anybody else who can lower our fees and making those expenses. So there's different options in the market to choose. Definitely comparing them, but there's one that's really right now developing, and we're probably going to be switching to that one.
Well, it's encouraging to know that it's not a crazy amount either, because I think a lot of people that are familiar with some softwares, it just gets so prohibitively expensive. Before you know it, you're paying a huge chunk of your revenue just to software. So it's good to know that there's a lot of options out there. We'll put your contact information in the description as well, so people can reach out to you on that. I still want to keep going if you're good for time, because I still have more
Oh,
questions.
totally. I mean, I get lost, and when we're talking about storage, I just lost
Well,
get lost.
Well, I'm the same way, and what I find so remarkable about you is that you're so passionate about it, and you've committed just becoming an expert that I think people can get a lot of value just from your enthusiasm for this space. So I want to jump into a few questions that have come up already. And Wyatt, if you can start with Darren's about staying competitive, because I think that's a great question. That's the one, yes. How do you stay competitive against funds, REITs, basically just institutional groups that have scale? How do you compete against those guys?
Of course, I mean, we have public storage, we have CubeSmart. Um, One thing that we do, and this is what I love really, we have there is a co-op existing storage which called Store Local. So it's a collaboration of owners that come together and compete against those REITs, those big guys. Because what's happening, if you look at the hotel industry, it's all pretty much taken over by big guys, and it's nearly impossible. I mean, not impossible, but buying a large hotel and opening somewhere a large hotel and having that mom and pop large hotel. You don't see that, right?
Mhm.
With self storage, but still there's a lot of large, huge uh, storages that owned by small operators. I'm not gonna call them public, by small operators. So these small operators came together and organized this co-op. So now I became also part of this co-op, and now we're together. We're gonna have the how you call it the buying power in a way. So it's instead of, let's say, even an insurance company, you have small guys. Oh, we need this quote. We need this for this for this.
Mhm.
Instead, we all come together. We need this, and we come and bring a big check. Here you go. And they're obviously getting more excited, and then giving us a discount. So we're together trying to compete against big guys, big REITs that have that economies of scale. They have opportunity because they have so many facilities. They can pay the big buck to those Google ads.
Yeah.
Where we come together, what we can do. So we are small operators. We're not against each other. We're really together. We're trying to actually don't let the industry completely become taken over by big companies. So this is obviously one thing. And then just in general, if you buy yourself in a market, typically they used to not go to small markets. Now they started coming there too. But what's happening when you're in a market with CubeSmart actually uh, raises the standards and raises the rents.
Hmm.
So now you can like kind of go along with them and get those larger rents. So it sometimes can be an advantage. If you have all mom and pop, if you enter the market and all mom and pop and they all charge low, and then you're the one that show up and start charging high, they will be all shocked. They will be all maybe try to follow you a little bit. But when you have CubeSmart, that guy probably already put that higher rent, and now you can follow, and then everybody in the market. So they raise that market rent rate up too. And
Hmm.
you sometimes you can also offer that personalization more, right? That personal experiences if someone wants, and offer some special what that market demands, and listen more to the population. So there's a few ways, but I think like all asset classes are experiencing that is dealing with that all that money that sits in the market right now. It becomes harder to get deals. Even when I entered, it was now I realize how much easier it was to find a deal than right now, and it's coming across all the asset classes. So self storage is not special there. We also there.
Yeah, it's crazy. Just before we jumped on this call, I saw in the news that WP Carey, the big industrial property owner in the US, just made a $2.7 billion acquisition, including a
Ay
good
ay
chunk of
ay.
self-storage. So it's a competitive space. It's everything from like that small mom and pop, like you mentioned, all the way up to this big institutional money. I like the fact that you made about things that you can do to personalize it. You can be much more nimble. You can make a decision which will be impactful immediately versus the bureaucracy and red tape that a big company has to go through. So I think there's a ton of opportunities. Great question, Darren. Great answer, Masha. I saw there's a couple more questions. If we could hit the next one by Darren as well, because that's a great question, and then we'll get to the one by Neil.
Of
So
course.
SBA loans. Can you use SBA loans in self storage?
Totally. Oh yes. Oh yes. 100%. There you can definitely get a high leverage. So you can get 85 or 90%. So you only
Hmm.
can invest 10 or 15%. So which is great. It's great for expansions or construction, also projects, as well as buying existing facilities. But you need to be prepared for long process. So that's sometimes when you buy in a facility, you don't have that time of 3 months while SBA gets all the paperwork and get it all together. And sometimes sellers not willing to deal with 3 months window of closing the deal. Sometimes somebody just told me that it took 6 months. I don't know how much like. So sometimes they want to just sell 1 month, 1 month. Let's
Yeah.
just get it done. So you don't have that option.
Yeah.
Sometimes also being high leverage is not the best thing, right? So it depends on what your investment strategy. They have also higher fees. They have fees for refinancing, right? They have when you get in, there's higher fees and all the paperwork that you also need to put in. They're really looking much deeper in you, who you are as a person, and how much, like looking at what assets right now. I mean, it's definitely much more annoying process, much more in depth, and much longer. But so many people had great, and we wanted to do it. There were some just hurdles for us, but it's really possible. Yes.
Yeah, that was so well explained, and you can tell that you're an active investor because you've looked at this as yes, if you can get a higher loan to value mortgage, then you're putting less money down. But there's all those impediments to it about delays and the process of getting it versus a seller, like you said, might just want to say, listen, it's pretty straightforward. It's self storage. It's not like you're buying a multi tenant high rise building. This is pretty straightforward to do your due diligence on. We just want to get paid. We're not going to tie this up for 6 months. So there's definitely pros and cons to that. That was well said. Question from Neil that came up. If you can pull that one up, Wyatt. Great question. What was the impact of the pandemic regarding the storage sector? Did it go up, down? Any expected outcomes?
I mean, storage unexpectedly, no, well, not that very unexpectedly, but did so well. There's an industry on average, and the rent went up about 20%.
Wow.
I mean, if I'm not, maybe 10%. I'm not going to drop exact number here, but I know it's everybody start becoming full. So what storage is, it's an event type of asset. So an event means when somebody get divorced, somebody, so it's four Ds: divorce, died, disposition, and something else, the fourth one, I forgot right now, but it's basically an event when something, people are disposition, dislocation, people are moving, right?
Mhm.
So what happened during COVID? People moved. People started moving to Florida. They need to put their things somewhere. People start moving to Texas, to Arizona, from California. All that movement creates storage usage. Then people were actually divorcing. People were dying. People were trying to save money and move to their parents, and they need to store their things somewhere. And then what also happened? Amazon, everybody just start buying things too. People start dropping the check from the government. Ooh, I have this additional money. Let me buy more stuff. And on top of that, let me tell you, our boat and RV storage is so much booming. This is what I'm also looking at. I wish I can clone myself and have a more Mashas working on a project. Otherwise, I would be doing right now a boat and RV too, which is still focusing this asset class, right? It just kind of subcategory. People couldn't travel. They start buying RVs insanely. There's been shortage of RVs. People now start living in RVs. They love travel and just living in their RVs. So there's super high demand in that sector as well. So 2022 is start going up. 2021 was going up. And now this year we're also expecting to go up a little bit, most definitely. And it's super hot. It's something that people just aware. I think it's also that awareness, like people hear about storage, and now you're gonna think about, like, you passing by storage. Oh yeah, I can now actually store my things somewhere. And now even some people contact me, Masha, they just increased my rent again. What can I do? Like, that's what we do too in our properties. We increase the rents. It's just when you have 100% occupancy, what you can do? You're going to raise everybody's rent. And then now you see who can afford it, who cannot. Those people leave, and now you fill in everybody who can afford. So far, it has amazing, but at the same time, being very careful. Now there's a lot of markets that become overbuilt. People just, oh, storage is so cool. Let me go build storage here. And they just, without in-depth analysis and understanding, building somewhere where someone else is building across of them, and then when they open up, they both open, it's times, and they both need to fill out those facilities, and this is where business fails. So yes, that's
A bit off topic on that, but I somewhat related. How important is exposure, like having a retail presence for self storage versus being tucked away off a main road?
so for many years, as of how the model was known, self-storage, you need to be on main road. You need to be on main road, and you be visible. However, research so far been shown that most people don't come even from seeing on the street. It's really from Google.
Mhm.
So Google is your number one exposure. Is what, like, chat, tell me right now, if you would decide, like, you need to, like, put some things in storage, are you going to go drive around and trying to remember the last facility you saw? Most likely just, like, will pull up your phone and, like, storage, you will just put storage near me, right?
That's how I
And
did it.
it's
Yep.
exactly. So
Yep.
this is where that exposure, I would say, is so much important. Being on the main road, you never can go wrong with that. But I think you can get so much opportunity if you know what you're doing with your Google business profile page and your website SEO, search engine optimization.
Yeah, the reason I ask is you mentioned that you were looking to acquire retail buildings, and the thought just occurred to me that from industrial properties are often tucked away in industrial parks by the very nature of being industrial. But quite often, you can find an industrial property a lot less expensive than a retail property, just because the land is less expensive. So I was just wondering if, like, if that's a viable opportunity, getting an older industrial property, which is perhaps underperforming, and retrofitting that to be self-storage.
Totally. This is actually second type of asset that you convert into storage. So, but usually you don't want them to be tucked away because you want it to be maybe on a more like edge of industrial park, I would say, how to say, like, not in the
Yep. On
depth
the
of it.
periphery of it.
Just because, again, those industrial parks, they're usually pretty big. So people, when they do storage near me, they don't want to be going somewhere like those. Sometimes those industrial parks can get very industrial. So
Yep.
when you store in just your personal belongings, and there's more women rent storage than men.
Oh,
So
interesting.
there's statistically wise. That's why you want to make it appealing. You want to make it also secure. You want to have it well lit, because this is most likely a woman who's making that choice. They're the one who wants to get these things out of the house. And
Yeah.
you want it to be like in a also area where it's not like an for women, I mean, some, let's say, come to industrial park, and then the area it's going to be, they won't choose that location actually. So
Great insight.
yes,
Yeah.
but totally when it's on a more edge of industrial park, yes. And chart, if you ever come across any warehouse that's underperforming, that's could be like I would say 50,000 square feet, 100,000 square, below 100,000 square feet, I would say would be more safe, let me know. Let's convert it into storage.
Yeah, I love the idea of it. Like, you've totally inspired me to look at self-storage to add to my own portfolio, because I've traditionally just gone after either single or multi-tenant industrial properties. But I love the idea, because I was under the misconception that they were so management intensive. But
Hmm.
like, you've convinced me to explore this more. I do want to leave some time for other questions if people have anything to ask about Masha. I still have a question as well, but if anyone does, please put it in the chat. And it was piggybacking off that conversation is finding properties. How are you sourcing, especially being out of state and you're looking at all these inland markets? How are you sourcing properties right now, and how can people do the same?
Yeah, so my always strategy is relationships.
Hmm.
So is building those relationships, and so far all my opportunities came from building relationships. It's been having a reputation, right? People, for me, was goal when I was starting in storage is like, I want people to think about Masha and think about self storage, or the other way around. And what happened after like a year, someone like passing by self storage, they're like, "Oh, Masha, I just passed by self storage. I thought of you." Like, perfect. So that's association is happening. So you want to be talking, right? Obviously, you never know what can everybody bring. So obviously, those two deals I got from wholesalers. So they knew they they gave me this opportunity. Where right now this third one, what's happening is, again, there's this guys that I know from mastermind, uh just a real estate investing mastermind. So there's all type of, and I think I'm the only one that does storage in that big it's different nights, different, it's a big mastermind. And they found a multifamily property that they're under contract and they're acquiring, and there's a huge parking lot there, and huge parking lot, why wasted just for like there's no need too much parking spaces.
Hmm.
And they're like, oh, could be a good idea to build storage there. And then who they think right away? About Masha. So that's why Masha will be building a storage in Columbus, Ohio. I'm so funny, I'm calling myself Masha. But anyways, yeah, so this is where relationships are. It's really talking about it. Talking, maybe you never know. I found some deals, if you're in single family space, some realtors sometimes even put storage. They find storage and they will try to sell it. So you can kind of do right away to your network and see, oh, if you ever come across storage, let me know. If you, and just start speaking about it. But
Hmm.
now I'm also start pursuing a second, just starting right now. Second strategy is direct to seller. So it's direct to seller. I have my virtual assistants who helping me out, and they will start helping me with direct to seller. So this strategy I'm just starting to work on right now, and excited because this will be avoiding that middle person and get even better price, and being able to build that rapport actually with seller, because now I really understand self storage and I can really talk to them and see why why they would be interested in selling and what they want, what's their purpose.
And that's the next question. You keep teeing this up for my questions because you keep bringing something up. And I'm like, that's exactly what I wanted to ask next. And that was you being an expert on the topic. You mentioned you went to like a ton of webinars, podcasts. How would you recommend to someone that's just exploring this? And I'm asking from my own standpoint as well. How would you recommend someone starts gaining not necessarily the same level of expertise that you've already achieved, but going down that road of trying to get there one day?
Oh yeah, for sure. I mean, first of all, I'm starting my actually coaching. I realized that there were so many people reaching out for help, and I realized that I have so much amount of time to get with everybody on the call and help them out. So I started right now creating systems and actually creating different material that I start sharing with people. I have right now, I developed my own underwriting model. So now I start sharing. If anybody interested, I have a free version that I'm sharing of the kind of back of the napkin analysis. So that's a back of the napkin analysis, meaning you get the most important information, but you can come up with offer price. So sometimes those big models of underwriting, they're great, but you get caught up with paralysis by analysis. You get caught up with all those huge several pages sheets of spreadsheet, and you get overwhelmed, and then already the deal is gone. And sometimes you want to be that quick. So I'm sharing that. So, and I'm also giving a list of resources. Where should I go? I have some. I was there before, and I just start completely taking all information possible from online. There is a great podcast by AJ. I would first recommend definitely AJ Osborne. He has a podcast that's a great place to start. It's called Self Storage Income. He has a podcast. He has an amazing book, which is called Build Wealth Through Self-Storage, I believe. Bestseller, also him. And he also has his own like circle. So he's also a great person to be to start researching. I would say he's a top leader right now, and he's so much giving. He giving away a lot of just free information right there.
Oh, that's awesome. We'll put links to that in the description. And then for your coaching and the free resources and the additional ones, is that available on your website?
Yes, totally, definitely. You can even go to like my Instagram. I have a link for that where you can get all that. Just to reach out, go to my website, and I'll give you my website, and you can get all the information there.
Okay, that's awesome. I saw one more question from Darren, and I did want to get to that one just because I, first of all, appreciate all the questions you've asked, Darren, and I think this is just a great one to end on. Do you know about the contracts with U-Haul and other places? So maybe what you're alluding to, Darren, is there ways of making additional revenue, or what happens, I suppose, if you get tied in with some of these contracts?
So yeah, I can talk about U-Haul in several matters here. Actually, definitely, we have ancillary incomes. So I was talking earlier that you can offer a tenant insurance and make that split and make that ancillary income. You can sell boxes and tapes and stuff like that, right? Too, which I'm completely against because it means you have to have a person there sitting selling boxes and tapes. I think we have better things to do than selling boxes and tapes. But you have maybe like huge facility and you have really someone that's taking care of there all the time. Maybe it's a model that work, but typically it doesn't really work anymore. Where I see where Darren is going, it's offering truck rental. And it could be U-Haul, could be Penske or other any. The beautiful part of it that you don't need to buy a truck. You just contract them and they put their truck on your facility or trucks or however it is, and you can have a drop box. So there's again no human involved. So you have a drop box for keys, and there's people who are picking up the truck. They can get the access to that drop box and they get that keys. So it's the beautiful part of it. It's helps for you to bring more income, but also attracts more people. So if someone who needs to rent a U-Haul, sometimes you have like U-Haul locations. They're not really U-Haul large like locations. It's only like a few trucks they're renting. You can have just one even. Like let's say your facility doesn't have space, but you can even offer one truck and it will still attract people because somebody who wants to do a self-storage, but they need the truck, they may go to you instead of someone who doesn't have truck. So it's, and again, you're also making the additional income where U-Haul is taking care of all their part or any other truck rental company. but you can make it's a beautiful business model for sure. We just,
Yeah.
and our both properties, we haven't had, we already have a competitor who offers U-Haul right there next door to us, so it didn't really make sense. So it's really researching what will make sense and not. Sometimes also, like talking about auxiliary income, you can put a billboard, and billboard is a great also income. They can be selling for like $1,000 a month. That space for advertising depends on your location and what the market needs. So there's several. You can have just even propane station. Sometimes if you have a large facility in somewhere more like rare rural area, you can put a cell tower. So there's different options to explore. Plus, you can always put an office of maybe office and offering some type of printing services. Notarius office or anything, whatever that market demands, you can offer that.
You've opened my eyes to how just big and much opportunity there is in self-storage. So we're gonna have to keep in touch, and might have to have you on the show again somewhere down the road, because we didn't even get to talk about your new development, and that'll be very interesting to follow going forward as well.
Most definitely, Chad. Most definitely. And thank you so much. I totally enjoyed watching and listening to your shows. They're so like in depth, talking about supply chain. Is so interesting how it's all interconnected. So thank you providing for all that value to everybody.
Oh yeah, thank you, Masha. You're right; it is totally interconnected. So thank you once again for coming on. We'll put links to everywhere you can get in contact with you, and I'd encourage people to reach out if they have any questions or want to do some of the coaching. You can tell how much passion and expertise Masha has for the topic. So Masha, thank you once again, and hope to keep in touch.
For sure, Chad. Thank you.
Okay, thanks, Masha.